Hi, I'm Ava. I'm here to share market insights, provide easy-to-understand tips, and help you make informed investment decisions. Let's get started. Today we are going to talk about the Consumer Price Index CPI inflation report for the month of March. The report was released on Wednesday, and it shows a significant improvement in the headline CPI figures. However, we are not seeing the stock market react enthusiastically. In this video, we will discuss why that is the case and provide a breakdown of the year-over-year stats. The headline inflation figure fell dramatically from 6.0% to 5.0%. Still, core inflation, which strips out food and energy prices, actually ticked up higher from 5.5% to 5.6%. That is concerning because energy prices are on the rise, as we can see at the pump. The Federal Reserve explicitly says that they prefer to use core inflation as a better gauge of inflation, and that is the tool they are using to see their progress on the fight against inflation. Before this CPI inflation report was released, the probability of the Federal Reserve raising interest rates by 25 basis points at their next meeting was 72%. After this report, the probability has increased to 73% of an interest rate increase. The expectation is that the Federal Reserve will raise interest rates by 0.25 at their next meeting on May 3rd. That is why the markets are not thrilled about this report, despite the sharp drop in headline CPI. Now let's talk about the breakdowns of the year-over-year stats. Energy prices are down 6.4%, services excluding housing are up 7.1%, shelter is up 8.2%, and food is up 8.5%. Let's break down these categories one by one. Beginning with food, we have an inflation rate of 8.5%. Still, the report says that month-over-month food prices stopped going up in March. The price of meat fell by 0.3%, fruits and veggies fell by 1.3%, and eggs fell by 10.9%. However, year-over-year stats show that butter is up 8.7%, milk is up 5.5%, coffee is up 10.3%, bread is up 15.2%, and eggs are still up 36%. Moving on to energy, this is the category that threw off the headline figure. We can see that energy prices are down 6.4% year-over-year. However, we must keep in mind that last year, oil prices and gasoline prices were at ridiculously high levels around this time. This is around the time when Russia invaded Ukraine, and oil prices shot up, and accordingly, gasoline prices. So, when we compare this March to last March, there was a big drop in oil prices, and that's helping the headline figures out a lot. So, there you have it. We discussed the CPI inflation report for the month of March, the difference between headline and core inflation figures, the probability of the Federal Reserve raising interest rates, and the year-over-year breakdown of the stats for energy, services, shelter, and food. Remember to keep an eye out for the Federal Reserve's May 3rd decision, which will likely impact the stock market. If you find value in the content I'm sharing, please consider subscribing to our channel and giving this video a like. Your support helps us continue to create informative and helpful videos for our viewers. Thank you.